Hey Alpha fam, welcome back to another episode of Alpha Commission. Just wanted to go over the general market today, and of course, to do that, we review the Bitcoin chart because the market follows Bitcoin. It is the price leader, and whatever Bitcoin's doing is generally going to be reflected in most of the other charts. And so you almost don't even need to chart the other coins. You just figure out what Bitcoin is doing, and they all follow. There's some notable exceptions with like Luna and a couple other coins, but they're pretty rare. Almost everything else will be following Bitcoin or perhaps even doing a little bit worse than it because a lot of these altcoins really got suppressed. But I just wanted to say that I hope that you guys are all doing well and that you're taking your profits when we reach the top of these kind of channels that are forming. It is important to take these profits when you are in a downtrend. And it looks like we might be forming a uptrend, but we haven't really put in a higher high yet. And we're still waiting to see if this is going to be a higher low. It might end up being a lower low. This is right now a lower high. And so that's a little bit disconcerting because this high right here is slightly higher than this one. And that's not a good look if we're trying to get into a bullish uptrend. Overall, this just looks sideways, okay? So let's go ahead and put on some indicators just to see, just to gauge the health of the market right now. One indicator that I showed you a while ago is the Gaussian indicator, and basically, uh, the bottom half of this channel acts as kind of like a tar pit. Okay, so if you're like an ancient mastodon, a dinosaur, you step in the tar pit, your foot gets stuck, you can't get out, and if you can't pull yourself out fast enough, you just end up sinking to the bottom. Okay, you sink to the bottom, you get stuck to the bottom and then it's game over, right? It happened here, it happened here, you know, and you can make a noble effort to get out, but once your foot and your leg get stuck in there completely, you just drown, okay? So measuring where we are on these Gaussian channels is important to just get a realistic idea of how we're doing in this market. And you saw a very scary thing last summer, right? This was July. We wicked down. Everyone got super bearish because, we're obviously in the bottom half of this Gaussian channel. We're falling. We don't know where we're going to end up. We don't know if we're going to get stuck there. But somehow we were able to pull ourselves up on that first try. And it's really important that you pull yourself up and that you get out of it as soon as possible, out of the bottom half. Well, in this case, we didn't do that. We tried. You can zoom in and you can see we had this wick. We tested the top of the middle channel, just like we tested it up here where we were able to break through, but we weren't able to break through. And if you're not able to break through, what happens is that you sink to the bottom. See, this one tried to get to break through, it sunk to the bottom. It tried to come up, sank again, tried to come up. It managed to get on top, but it never got out, and so it just sank all the way down. It was like it was defeated. It drowned. Finally drowned in this tar pit, okay? And so that's what's happening right now. We fell down, we tried to get out, couldn't get out, fell to the bottom, scarily wicked out of the bottom, you know, tried to swim back up. We just can't get that breath of air, right? Fell all the way back to the bottom. And look how amazingly this price action moves on this Gaussian channel. Okay, so you can really see that we're moving further away from the center, and that's not a good look. That's not what we want to be seeing. When did that happen last in this type of formation where we have you know this distance is just a tiny distance, and then it's bigger distance, and then it's a bigger distance, and then you drown, right? You just drown. And if we go ahead and just move forward, then what we can see is that we're doing something very similar, just in a slightly more inclining way. You know, We grabbed it, then we got a little bit more distance, a little bit more distance, and if we don't break through this, if we don't bullishly break above that middle channel of the Gaussian channel, then we're gonna start making these bigger air bubbles or whatever you want to call them as we drown to the bottom of this. And it's the gap between the central line and our price action is just going to be too far. We can't pull ourselves out of this tar pit, and we're just going to drown, right? We're going to go extinct just like the animals that got stuck in the tar pits. And so, let's take this off for a second because I think you get the picture on that. And you know what? I think it would be good just to throw on our EMAs again, just to show you how this is working out here. And, you know, when we did break down, what we did is we reconnected with those 200s on the weekly. On the weekly when we broke down, and they're right about here. What's the price range on that? That's going to be approximately $26,000, approximately $20,000. So if we do get stuck in that tar pit, well, this price action may move up just slightly. So maybe we can just move these up just a bit because it might take a couple months for this to happen. It could happen tomorrow. It could happen in a month. It could happen in a couple months. You don't know when it's going to happen. But if we can't pull ourselves out, then we're going to drown. And, it's going to be approximately in this 25K area. Maybe a little bit of a flash below. But if history has anything to say about it, we're going to use this support here and put the 5-day on. We can count on this 25K price approximately. Just going by history. It doesn't mean it's our fate. Maybe we just go sideways forever and we don't end up drowning. Or maybe we swim to the top, okay? But this is the thing that we have to prepare for, because if it's happened before multiple times, it can happen again. And so let's go to a lower time frame, see where we are. We're making a little bit of a hook here. You could consider that to be bullish, but so far this is just a lower high, right, on this lower time scale of a 1 hour. Here's our highest high, lower high, lower high, lower high. This wick is nice, kind of like some buy pressure to push us up, but we may be turning around again. Let's see how this candle goes. We could just chop. See how the price action does this sometimes. Just chops. Sometimes you get these bullish candles and then they drop back down. Do it again before you start to recover some space. And the fear here is that we could put in a lower high. And this is kind of, this is our lowest low, higher low, higher low. But what if we have a lower high? That would suggest, just like here, lowest low, higher low, higher low, higher low. But we had a lower high. And what did we do? Our price action fell down. So if we do go up, we want to make a higher high. We want to get bullish again, right? So that we have a clear uptrend of higher highs and higher lows. Well, we ended up wicking pretty much right to this, pretty much right to the support that I outlined here several episodes ago. Well, if we go to the 5-day, we can see this is just an area that's pretty responsive. You see, we wick up to it, break down, then we bust through it. Break down below it, popped back up, got rejected, tried again, got rejected, tried again, got rejected, tried again, broke through it, then used it as support, right? Broke down, didn't, almost got to it, used it pretty much as support, bounced up, broke down again, bounced off of it, finally broke through it, and then we're starting to chop through it, right? But look, we wicked perfectly to it. So this line is important. I wouldn't want to see us losing that $40,000 support, because if we do, the history of Bitcoin since last summer, since a winter ago, last year, a year ago, it shows that if we get below that price action, it's hard to break above it. This is okay. We're just chopping on it. We could consider this that we're above it and we're just dipping our toe below it, right? But what we don't want is to get our entire body underneath it, because this is, again, like just to use a drowning analogy. This is like the surface of the water, and if our head gets under here, our whole body gets under here, and then it acts like a layer of ice to hold us down as we try to break through, but we can't, then we can just drown. And then the other things that I mentioned about the Gaussian channels, that becomes more and more relevant, right? So we're swimming while we're up here. We're trying to get back up, but if we break down here, we're drowning. We're drowning, and then perhaps we can see that 25K. All right. So it's very important that we hold this territory. And luckily, we're 41,700 right now, so we are having some bullish response after having hit there. Because for the longest time we were just playing around with, let's see, there we go. We were just playing around in this $41,000 area, this $41,300 area. And look at this, it's looking pretty bullish. This looks like it wants to go, whereas this looked like it wanted to drop, right? Well, we can have fake outs just like this one. This also looked pretty bullish. Looked like it wanted to go, but then it just suddenly lost all of its support. So let's pay attention to this and see if we can pop back up. If not, then we're going to have to hope that we don't break below 40,000. This could be a fake out, just like this wick right here. That could have been a fake out just to liquidate, as maybe they wanted to go up, but then that could end up being a fake out, and maybe we can come back down, chop for a while. Because look at this price action. This took a long time, right? This is a very small formation. Maybe we want to have a bigger formation, right? Just to give some balance, to give some weight to the chart. Look at this very big formation underneath here. See, once we got under this line, we really struggled to get above it, right? And while we were above it, we looked pretty healthy. This looks like it's drowning. This looks like it's pretty healthy. Just the market wasn't very enthusiastic, right? Lots of stuff going on in the world these days. And that's the fear right now. Lots of stuff is going on in the world right now. So how bullish can we realistically be if most of the markets are struggling? It's something you have to really consider. And while Bitcoin maybe is going to be used by Russian oligarchs and different traders, trying to bypass, regulations that are trying to limit the Soviet economy under Putin, as he abuses other nations and basically is invading Europe um, on a pretty grand scale. I mean, he's done it for multiple countries now, so it's not a small deal. And he has other countries in his target. Like this is seriously becoming the possibility of a nuclear war. It's becoming the possibility of a world war. We are basically in the beginning of World War III, Cold War II, whatever you want to call it. The Cold War never ended. Under Putin, Russia has continued to be the Soviet Union, and he's now fighting hot wars. He's now trying to acquire territory in Europe. And we really need to let that sink in because the economic consequences are going to be incredible. And we haven't felt anything yet. We haven't felt anything yet, but we're going to feel it. And for people who are in denial, they're going to find out. They're going to find out this year exactly how hard it's going to get for especially countries in Europe, which have a lot of dependent trade on Russia, and also people in the Middle East who have food trade with Ukraine. And then, of course, it impacts a lot of business in the US, and we're also going to suffer, along with most other places in the world. You can't just cut a country out. You can't just cut a country out that's as big as Russia and expect there to be no pain. There's going to be a lot of pain. A lot of people are going to get hurt by this. But of course, nothing like what's happening in Ukraine and to the Ukrainian people. But keep that in mind because you're going to want to take your profit when you can. If you're buying here, you're going to want to be taking your profit when you can because you don't know what's going to happen in this world. The markets are going down, okay? And maybe Bitcoin holds, maybe it doesn't. Maybe crypto gets adopted faster because of all these regulations and people are trying to bypass the regulations, or maybe it isn't. We don't know yet. All right, so don't gamble. Take your profit when you can. Then if we have dips, buy a little bit and take your profit again later. We're kind of in this wedge here. Just kind of stuck in this wedge. There's this kind of diagonal price action. This is kind of horizontal price action, but it is diagonal down a bit. And we're just getting squeezed between these diagonals, which previously everything was down, right? But these ones, this is kind of a squeeze here, just on the price action alone. The buyers and the sellers, they're confused. They're confused as heck, and they're starting to squeeze each other. Squeeze up, squeeze down, squeeze up, squeeze down. They're confused. They're just going sideways. And so this is either going to pop up or it's going to break down. And we're not really sure how that's going to go. A lot of people might draw it like this, right? Something like that. But you get the general idea. I like it like this because I can see where exactly we're being squeezed. And this just gives me an idea, like we're on top of this bullishly, and like we're very bearish when we're underneath this. So we're getting squeezed hard right here in this area. And if price, goes sideways a bit, doesn't seem like it understands exactly what it wants to do, it's because the market doesn't understand what it wants to do. And, we do have this kind of a fractal going on here. I've pointed this one out before. I just want to update it because we do have this new section. And I just wanted to update because I've added this blue one where we're kind of recovering this area. And it's just weird how the bots allow this to happen. This was kind of a just a pop up and choppiness to the left, pop up and choppiness to the right. This was just choppiness with little shoulders, little wings right at the end, right? And then this was kind of like just a crazy lightning bolt. This was kind of the same type of lightning bolt. It's funny, they have the same amount of points on them. With a little downward shoulder, little downward shoulder. And then this was the center of it, which formed a W. And you can see you have this W shape here, and then you have like little wings, dips, pop up, and then little wings again. And it's hard for people to see that, but if you do see it, it can give you a little bit more confidence about how the market's playing out. Because I really suspected that this choppiness was going to pop up. because it's the reverse of this one, right? I saw this W formation, and I know from analyzing Bitcoin, as long as I have, in such detail looking for these type of patterns, that when we see a shape like this with these institutional candles on the sides, that they do tend to play out. They do tend to play out. And yeah, and so far it's doing it. So what would this suggest? By the way, this isn't to trade off of. It's just to give you a little bit confluence, just to give you an idea. Like, are the bots working on some? Because the bots that professionals use to trade with, like really, really expensive bots owned by billionaires and institutions that are highly fine-tuned and customized for certain VIPs. Not the off-the-shelf stuff that everybody uses. You know, not Joe Schmo. These aren't the same bots. These bots are way more sophisticated. They're moving a lot more money, and they're taking a ton of profit out of the market constantly. They're dumping and buying and manipulating the market constantly to take liquidity. And so they might run the algorithm backwards sometimes. And that's what I think that these type of patterns represent. I don't think it's actually psychology here. I think it's actually algorithmic from the bots. It's just my hypothesis, but it's just too weird the way that it's such precise movements. And the way that you can think about it is that like a bot will calculate how much it needs to lose, like how much money it can lose in a drop in order to buy low, in order to sell high, in order to just completely dump to scare the hell out of the market, and then to buy very cheap. And then it just, if you use that type of algorithm, then of course, if there's a drop on this side, they're going to try to recover it on this side. And it just depends on what price they get. So these moves may be distorted, but they can sometimes be the mirror image. And so I just pay attention to that stuff just because it gives me a little bit more confidence that, look, there was a dump here. And so what I would expect is that there's a pump to recover that dump. Now, this fractal, this mirror image W fractal, is being stretched to its furthest limits. Like this was pretty good. This was pretty solid. This was okay. This is starting to get super exaggerated, and this is a huge distortion. And so this may not even be part of the equation. But I would suggest it is because it comes after this dump. I would not suggest that the rest of this is part of it, but I would suggest that perhaps we'll see that pump, that slow climb upward, followed by a choppiness, and no guarantee that we're going to get a higher high, although this would suggest it. And it would also suggest a retracement. So it would suggest something like this. Chop, chop, chop. Maybe scare you. And then pop up. Right? And that would complete kind of a head and shoulders here. And this might be part of the measured move. Not perfect, but part of it. Well, we can't really count on that happening because, of course, a lot of things are going to be happening over the next couple of days. Lots of stuff with the war with Russia, lots of stuff with the Federal Reserve, and so we just don't know. We just don't know. The calculation can be changed at any time. These things can get super distorted. It could just fall to hell, right? But if we do start pumping, it's just going to give me a little bit more confidence to take the trade. And I would not say for anybody to ever trade on that, just a little bit more confidence. That's all. And, one of the interesting things that we can see on this chart is the direction of these channels, of these little sections. I don't know if your brains like chop up the chart the way that mine does, but I just see it as kind of like musical notes on like this type of musical stationery, right? There's the bars on the music paper, and then notes like are ringing. And so these musical these kind of like channels, they have different directions to them, and the music is kind of written like, and these are just kind of like fluttering in the wind. And what I noticed is that the music has a certain ring to it, and we can repeat that music. This is a lot of lines. I know it's pretty ugly, but I use it for myself. I separated this one because I just use that for myself. But I made these simple ones, just to show you what I'm seeing, and you can imagine it for each of these. Look, very simple. M, pop up, all the way down. 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 And then this, of course, was the W that I identified. So the W obviously is not an M, and so this one is not a valid formation. But look what happened on the other side of the W. The pattern continued. M, pop up, all the way down. M, pop up, all the way down. What would that suggest? That the next move is going to be an M. And also that we might get a fake out and go all the way down, right? So this would be a counter argument to the other fractal. This is also a kind of fractal. It's a kind of psychology that's playing out. And I mean, it's either bots or psychology, whatever you want to call it, you know. Anyway, it's a fractal. That's what I call it. And so, you know, we have to be on the lookout for these type of things if we want to simplify our trading. A lot of people are just micromanaging like on a, you know, on a 1 minute, on a 15 minute. And I'm watching like some extremely good traders just like, oh my God, where's the price gonna go? Where's the price gonna go? They're just like they've got their fibs out, they've got their, you know, they're like these precision tools. They're on the 5 minute, you know, they're saying like they don't know what's going on in the price action, what's gonna happen. And for me, I mean, at least the way that I think, I don't know about you guys, but the way that I think, I don't know, I'll just put on like a 4 hour, pop up, pop down, pop up, pop down, pop up, pop down. I identify a couple patterns like that. If they continue to play out, then I just say, hey, you know what? This is a good place to sell because it's turning around. It's a good place to buy. You know, I've seen this pattern play out. It seems to be the psychology of the market. Can kind of play this. And if you can just like mark off your range, if you can mark off your range, then you can pretty much, you know, trade it that way, right? Here's my range. And of course, I want to sell here because I know it's going to break all the way down. I mean, I don't know, but I've got a pretty good idea this thing's going to break down. So after the M, make my money on the M, and then it's going to pop up and break all the way down. So that's my last chance to get out, right? You know, this one would have tripped me up. But you know, I guess they got to throw in a curveball every once in a while. Maybe that's why they reversed the pattern, you know, reverse the fractal. Maybe that's why it's a mirror image. You know, they tried to throw people off. You know, these bots, you know, they're smart. They use AI and stuff. So again, like this would be your last chance to get out. So it's pretty obvious what I'm showing you here. is just some type of counter argument to the previous fractal that I showed you, but also how you can trade using these type of knowledge with a little bit more confluence, so that if we do make an M and then we have a pop-up, you may want to just get out of the market because there might be a huge dump. Now, if we start just like going up, you might get back in, right? Because one thing that we can also notice is that while this pump up before the dump does get a little bit higher than the M, sometimes it doesn't. And anyway, it's not by much. So if you start getting like pretty far out there, you can pretty much expect this is invalidated and that something new is being formed, right? Like we're going to get bullish because this is obviously a bearish pattern, at least for how this is trading. Other coins may have other patterns. This isn't like the only pattern, right? Like I don't know why it's working out this way. I don't know why, my brain simplifies it this way, whereas others, get stuck on every single candle, getting terrified. But this just helps me be a little bit more confident in how I trade, and so I'm sharing that with you. You can ignore that if you'd like. All right. So let's see, what else did I have here? Yeah, these lines I mark out because you can see. I mean, it's hard to see, but you can see. Let's just focus in on like one of them. The majority of the price action is in this area, right? This is kind of the middle one. This is the bottom one, top one. It's down here, and then it broke above. And so I just marked out these channels. Anytime I got little price action, I just marked out the diagonal of it. And I marked out the diagonal of it because they all have their own character. How can I draw those M's if I don't know the diagonal? How can I figure out the fractals if I don't know the diagonals? The diagonals are your friend. I love diagonals. I don't care if this looks sloppy to you. I don't care if it looks sloppy to anybody else. This is how I make money. It doesn't matter what it looks like to you. If you say this is ugly, I mean, I could say go stare in the mirror. I mean, like, so are you, right? Like, nothing's objective. It's all subjective according to who's looking. And my wallet is looking at this one, and my wallet finds it beautiful, right? Maybe your mom is looking at you and finds you beautiful, Doesn't mean everybody does. So these things, it doesn't matter. It's just a tool. Just a tool, right? And by the way, I'm sure you're very beautiful. Just a joke, okay? And so I color code them when they extend extremely long. I color code them to separate one area from another so that I can remind myself that price action might have a similar pattern, but it might have a different direction. The direction of the patterns might change, right? Because I don't want to just think horizontally. I'm gonna screw up my fractals and all of that stuff that really I've shown you is helpful for trading. Okay, I've shown you multiple videos where fractals are helpful for trading if you have the imagination for it. If you don't have the imagination for it, just trade your own way, right? But I'm just gonna share with you what I do. And whenever this price action continues and I notice that it's continuing in a new area, then I extend it. And when it drops down a level where it wasn't before, then I make a different color because like this is a hot, this is kind of like a high price and it cools down. And then if I'm under there and it's moving up now, the price action's moving up, then this might be good buying areas. And look how that worked out. I wouldn't have want to buy here. I wouldn't want to buy here. I wouldn't want to buy here. Probably didn't want to buy there. Where did I want to buy? Here and here. Where did I buy? Right here and right here. While other people were just really confused about this, right? I mean, you can use your horizontals in a very similar way. Very similar way. It's almost the exact same thing. So you don't, you don't have to stress about one way or another. If horizontals work for you, use horizontals. I use diagonals. That's all. And I'm just trying to share with you what works for me. And when they're going down, I call them anti-origin lines. And when they're going upward, I call them origin lines. I copied that term from Kosaverdes. I have no idea how Kosaverdes makes his origin lines. I don't really watch that much of Kosaverdes. I've just learned some small things about not fibs, but EMAs from Crypto Reda, and who learned some tricks from Kosaverdes. And so, like, this is just my own concept. I'm not trying to like use a confusing term. I'm just using my own terms. These are anti-origin lines for me, and if I have diagonals upward, I call those origin lines. And then these are just horizontals, right? And then I also have radials, and I'll mark out radials as well. So you can see this now makes almost a three-dimensionality to it. And look how precise this is. If you get a radial on top of your origin or anti-origin lines, then you can suddenly really see how the price action is flowing. Not only can you see where it's over bought or whatever, where it's overheated and where it's a good buying opportunity, but you can also see how the price action might move, and that this cool area, right? Like this is kind of overheated, this is kind of cool area to buy. It might continue upward. And so while if you're just using horizontals, you might say, "Oh, I can only buy under this horizontal line." Okay, you've decided that. But if you use my method, then you can decide, "Oh, okay, there's this kind of like organic area where as we move forward in time, you can be buying here, 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 here. And as long as these radial lines are respected, these should end up being fairly good bargains. Now, we don't know if it's going to break down or not, so there is some risk, right? If this breaks down, I mean, then these radials that are kind of radiating from the center here, right? Almost like there's a sun radiating, like sunshine out, right? Well, it just means that we're forming something else, and I just have to mark it off in a different way. That's all. And so maybe, out of 1, 2, 3, 4, 5 purchases, maybe this one ends up being the one that was too expensive, right? And if we break down, I can also see, well, maybe it's a good time to sell something because I'm still in this hot zone, even though my cool zone is overlapping with it. So this is just medium, this is just warm, medium temperature because it's cool and hot, like overlapping. Whereas this is nice and cool, and this is very cool, right? So this may be kind of heavy to think about, but one thing that's cool about it is also you get these marked off zones. You can see how price action, they just touch these lines almost perfectly. Touch here, 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 touch here. And look, where the channels break, where they make a new lines, diagonal ones, it's almost as strong as like those horizontals that I was showing you previously, right? Like this one. Like this is very clearly bullish on top and bearish below. But also for these horizontals, pardon me, for these diagonals, like on top of this midline, right? This is bullish and this is bearish. Broke down. On top of this midline, this is bullish, this is bearish. Look, it hit this line, this diagonal, and this midline diagonal right here, and it broke all the way down. Like, it just cannot break two of them at once. It just has a heart attack and died, right? Where those two crossed over. Likewise, right here, there's this line, very thick line, and then this thick line. It hit here and it just died. Same thing here. It broke under here. It tried to hold on, but it lost this one, and this horizontal, and it just died, right? And look, even when it pumped, it had to pump off of this diagonal, and then it had to break through here, and then it used, you would never have known. It used this diagonal and this horizontal to climb back up. And by the way, it didn't use the horizontal. It used this one. It used this diagonal. You see? And you wonder, why are these things shaped like triangles so often? Why are they shaped like these weird, like rectangles and diamond shapes sometimes? Because, because they're getting formed in these diagonals that I'm showing you. They're not being formed by these horizontals. Horizontals are just one thing. Just one thing. Just a simplification. And look, you can see here, right? It bounced on this line. Hope that's locked. It bounced on this line. I didn't know it bounced there. Look, it bounced perfectly there. Wicked right to it. Couldn't break below it. And so what did it do? It tested the top. And look where it's getting stuck, right at my diagonal line. I didn't know it was going to get stuck there. I drew this diagonal line way, way, way a long time ago. All the way back here. But it works perfectly. And it worked better than this horizontal, which was the main support. It's just we knew that it can't get below that horizontal or things are going to turn bearish. And look, what a coincidence. What a coincidence. That overlaps with this thick one. Right? That's a main diagonal support, and this main horizontal, and this main diagonal. You see how they all overlap right there? So there's three of them giving support, and guess what's happening? We're bouncing pretty bullishly. I mean, it's more bullish than this bounce. And so we're going to see. Maybe we can catch some footing here. And if we do break up here, one thing that you might think could happen is we're going to travel in this diamond. Right? Something like that. If we stay bullish. And then we're going to have to get on top of this diagonal and work our way up to this radial and pop out of that radial in order to figure out our way forward. Alternatively, whenever we hit these main lines, you see how we just we either pump or we collapse after checking them, right? Fall all the way down. And so I have no idea where we would fall to here. For that one, you would probably use this a failed head and shoulders measured move, maybe somewhere down here. I don't know. So I just wanted to share this tactic with you because it works pretty well for me. You can use just the radials, but look, you wouldn't know where that confluence of those diagonals are. You see how those diagonals worked so well? They worked really well. Look at this. One line, two line crossing. That's exactly where it got rejected from. Look, it tried to bust through. It couldn't break. Look at that. Perfect. Perfectly wicked to that diagonal and this diagonal. and it got rejected right there. And it couldn't break its body through this one. And so it went down. It gave up because it had 2 overhead. It gave up. Didn't even need to wick down. Just gave up. 2 overhead. Crashed down. Just gave up. Right? 2 over its head right here. Plus this horizontal. It just gave up. Right? 2 here. Rejected. It's just a way of visualizing and creating concepts where you think it could bounce. And if it broke down, it would break down pretty strongly, right? Like this could chop down to maybe this midline and then break down again. And you see they get stuck there, right? They get stuck in these little regions. So enough about that. Also got my horizontals. You can see they react up and down. This is what you're probably used to if you're trading. Sometimes they don't work out. Sometimes they're triangles and you don't know why. It's because of the diagonals. It's because of the diagonals. I feel like I'm missing half of the information when I look at this. Where are my DCA areas if we do break down? I guess I'll try to catch this area again. Try to catch this area in case we put in a higher low. Right? We could do something like this. And maybe this area would be good to catch something in. If we break down, then maybe try to catch it on this support. Break down, then maybe 28K, right? If we keep going, then I'll try to catch something in that really low area. Which, by the way, I should probably move up. I didn't have much information about the Gaussian channel and the EMAs when I made this box, but now that I do, I'd probably put it more around 25K. It's just that we have support here on the charts. Let's see, turn off those. I think that's pretty much all I wanted to show you on the chart. Let's go over some things on the man, I hate that when I reopen TradingView and they put these like coins on it. I don't want to see the symbol. The logo. Okay, there we go. I just want the name, the price, and the percentage up and down. Otherwise, it gets too full of junk. Okay, what have we got here? Let's see how the total is doing. Let's say total 2. Still under trend. We didn't break out for sure, right? Like we're actually getting rejected. The last time we had this conversation, I was saying, oh, we're at resistance. What's going to happen? We broke down. What did we do? We broke down, right? Nailed that one. Now we got to see if we can use this as support, right? You see this wick? We can just get on top of this and maybe push up. Maybe we have a chance. What would that suggest? A little bit of sideways action, a little bit of upward action. Maybe a drop, maybe a wick to scare everybody, and then we pump up. That'd be cool. Otherwise, we're going to chop here and drop. That's not going to be cool, right? That's going to be one of these things. It's going to be a terror. Let's see, Bitcoin dominance. Yep, dropping. Man, Bitcoin is struggling to hold on to this trend. It just keeps breaking under it. Look, it came right back to it. See this green line? It came right back to it. But it just can't keep a hold of it the way that it did previously. Right? Look how bullishly it held on to it last summer. That's when we had the the bull market just went, right? Just went. But in this case, we broke down and kind of caught this strange diagonal before repeating a fractal of this kind of summer bullishness. But look, we've been interfered with. Like we just died somehow. So that's weird. Maybe we're going to come back down to this diagonal. I don't know. This is a little bit unusual compared to this behavior. I mean, we sort of did it like here. And then we had a pump up. So maybe it's going to be something like this. Maybe, right? Maybe we're just going to get like a little candy cane shape and pump up and then chop down again and then go like this, right? Something like this. Who knows? Maybe even something just really scary and then we do it again. I don't know. I don't know. Just a hypothesis. But the key point is our dominance is struggling right now, which could be good for alts and other things, except that price action was going down, so that's not too good. Because if price goes down and Bitcoin dominance goes down, just everything goes down. Which if we look at our altcoins, you can see most stuff is going down, right? Anything doing good? I mean, 2%, come on. Credo, 0.5%. This is what I was telling you. The Credo always gives you a second chance to buy. So it's coming down here. Look, you could have bought that right on support. Look at that. That's nice. Good Credo. And look, this shoulder is not lower than this one. So in case of Credo, you do have the potential. Well, this is pretty sloppy, but I guess you could use this area. You do have the potential for a bullish head and shoulders. Should take you up and up again. Because Credo likes to do double pumps. If we do get bullish, most likely it'll do a double pump. Just if history has anything to say about it. But otherwise, this would be the measured move. Take your profit around $3 or $4. No guarantees. Because we also had this type of bearish head and shoulders playing out. And if this doesn't resolve, then this one could still play out. It's just, I think it's invalid because this shoulder is higher than this shoulder, which means price action is up. So it still suggests Credo wants to go up. But we'll find out. The market will follow Bitcoin, which is why I do analysis on Bitcoin. Because as bullish as Credo is, if Bitcoin dies, everything dies. Right? AVAX. AVAX is one of those ones like a Luna that's just doing, its own thing. Pretty cool. Some of this stuff. Sorry, this is a mess. I'm charting both log and linear at the same time. Let's get away from these coins. Let's check out the volatility in the market. Oh, hugely volatile. Oh no. Stocks aren't going to like that. Stocks do not like volatility to be this high. So that's not a good sign. What we want is volatility to be below 30 and preferably below 20 to have a nice stable trading in the stock market to give support to crypto. Wow, gold pumping again. Nice. Not a good sign for the market. Oh my gosh, the dollar is screaming. Holy moly. The dollar is just screaming up. That's huge for the dollar. This has to be overbought. I don't know. Hmm. Let's go to the daily. What the heck is wrong with this chart? I mean, it's pretty high up there. Yeah, but it could still go higher. What? Okay. Okay, the dollar doing great. The US dollar is doing great. Probably because Russia is threatening nuclear war and people love stability, right? This is a weird formation. There's a lot of arcs on this one. It's not linear. It's not linear and it's not log. It's like arc. It's arcs. It's interesting. Probably a combination of other currencies flexing in on it while it's moving in a logarithmic way. But this is price history all the way back to the 1960s. And yeah, this is, I mean, obviously the power of the dollar has gone down, gone through these cycles, but that doesn't look bearish to me. This looks like we may be entering a new era if it doesn't get rejected here. But this is an area where it looks like it does get rejected. So that's good. If we have the dollar coming down to this support arc, weird that it's an arc, but the support arc, then maybe you know, assets like Bitcoin can rise a bit. So follow that. My projection for Nasdaq still holding up. We wicked there, kind of reaching this height. I'm expecting it to maybe double top or something and then have a massive correction later on. Sort of like this. See this green area? Probably marked an EMA. Maybe the daily? No, monthly maybe. 2 week? Yeah, 2 week. Okay. Yeah, because the monthly doesn't show the 200s. So I use the 2 week to show how the Nasdaq, when it really corrects, it gets under the 200 on the 2 week. And so if the Nasdaq corrects, we're probably going to see this type of area. It's going to be a lot of pain. That's when you really want to be out of crypto if this happens. And if it happens soon, then you're going to want to be out of crypto because everything's going to go down. But let's see. Let's see if they can push this back to the next year the same way that they were able to do it back here, right? Just change some policies, push the pain back, and then instead of moderate suffering, we have huge suffering, right? As long as the rich guys get to get out, right? As long as the rich guys get to get out, they don't care about what happens to the rest of us. Why would they? I'm not that cynical, but sometimes it does seem that way, doesn't it? Man, Apple is crazy. So, UK. Japan. Yeah, Japan has a lot of imports from Russia, a lot of trade with Russia, so taking a hit there, but nothing terrible compared to the past. Wow, this is okay. Germany, oh no, poor Germany. Doing another correction. Keep getting hit. Yeah, that's that volatility I was showing you. The volatility is just, it's through the roof. It's skyrocketing. Like these are all-time highs, right? This whole area is all-time highs. And we're basically doing it again. I mean, that's the threat of nuclear war. All right, guys, I'm going to just wrap this up. Hope you found that helpful. Hope it wasn't too convoluted. But yeah, that's what I look at. Oh, and I'll probably just mention one other thing. You guys might know this already, but oh, maybe you don't because it's not that common knowledge. But the CME gap did get filled. So again, the CME chart is the professional charts. And usually when they have these little gaps, the price action comes back to fill the gap. So we had a gap here. Price action came around, filled the gap. This might have been a gap, but we came up, filled it, made another gap. It's just because of the weekend. The weekend or nights or whatever, holidays. Sometimes there's gaps on the chart. And the price action just comes up to fill the gap. See this wick? This wick? They just made sure to cover those gaps. And it's these institutions trying to make sure they understand the exact price for everything. Because that data is power. That data is money, right? In markets, data is money. It's just all data, right? It's just all numbers. So having gaps is not a good thing. That's how you can think about it. And if you close for the weekend, you close for holidays, you just gotta recover the gap to find out the data. Otherwise, your data is gonna look like Swiss cheese, you know? So you gotta recover as many of them as you can. So it's good. It's good. We recovered it. We went a little bit further than it, which is scary because that means we could break down more. Like maybe it's not just about filling the gap. Maybe we're going to break down more. But it looks like we're moving back up, and hopefully within the next 10 hours, we can close a candle that's just, you know, it's maybe a little bit more of a indecisive candle that maybe suggests we'll go up. Who knows? But we'll just be paying attention. And it's been an hour, so all right, I'll let you guys go. That was your alpha for the day. Stay safe, guys, and happy trading.